February 28, 2014. Current time is 19:35 GMT. Jay Meisler here from globalreview.com with the week ahead Forex trading outlook. If I was a bookie in London, and who wouldn't take the other side of euro dollar closing not only the week but the month above 138? But this has been the case, and you probably had your clock cleaned if you took the other side of that bet. As euro dollar continues to confound. But this is where we are coming into the new week. Euro dollar is closing above 138. And we have a week filled with all kinds of key data. We have PMIs, manufacturing and service PMIs. We have the Australian, UK, and ECB monetary policy meetings, a bunch of other data, and it tops off with U.S. non-farm payrolls on Friday and the unemployment report. That has probably going to be less of an impact because weak data has been explained away partially by bad weather, and we're due for another snowstorm in the U.S., northeast U.S. on Monday, by the way. Nice way to start in March. But the key event is probably going to be the ECB meeting on Thursday, where expectations have now shifted away from some sort of easing based on Friday's inflation report. And that took the euro dollar higher. So if you look at charts, this is a monthly chart, and the key level on the upside in the monthly chart is, it's kind of a wedge here, I guess, and it's 138.62. The key level on a daily chart is 138.90, and it's also important on the weekly, but not as important as these levels up here. So we'd say 138.6. That's actually 138.50, and give or take, because we do monthlies, you have to give some take on the trend line, and 138.90. And now on the downside, obviously it's not close. It's 132.30 or so. So this is your wedge, I guess you call it, and you can see how this 138.50 to 90 is going to be a very important level. But in any case, 138 is going to set the tone for the coming week and probably the coming month, unless for some reason we take out 140. I don't see why, but that's the way the market's pushing, and you can't fight. You can't fight it at the moment. If you look at the daily chart, you had a big fake out. You broke the trend line here, came down. We held this cluster of moving averages, and we popped up back above this trend line, which on Monday comes in at 138.09. If we look at the 4-hour chart, it's 137.75 was the breakout level. So that's the level it needs to hold to keep the bid. Although 138 is probably more important from a psychological level. And if you look at the 1 hour, the breakout was 137.30. So you got this whole room down here. This level here is 137.88. So if you look ahead to the week ahead, the market may have some more momentum coming into the new month if there are any more stops to run. But certainly the shorts are now smarting after quite a turnaround week. And as I said, 138 is going to set the tone in a new week. The key level on the daily chart, and I'll go back to it quickly, is 138.90, and that by all means should be tough. So you get into this area. If you get above 138.50 to 90, includes that weekly trend line, you're into really pretty tough sledding. If 138.90 goes, then the market's going to set sights at 140. If 137.75 to 138 doesn't hold, then we're back into the existing range. That's it for now. Watch data. Watch, as we could tell, the reaction to news is more important than actually the news itself. And you saw on Friday where the euro reacted to good news and ignored bad news. One word, and if you look at the bottom of this chart here, you're going to see a link for was the Eurozone inflation HICP or CPI data leaked beforehand. If you look at the, let's go to a 5-minute chart, and you'll see right in here, this is 10 minutes before the data was released, and you see how it popped up to a new high. It was I found it very suspicious, and I suggest please click on this link read the article, and then follow through in what I call a call to action. It's about time we put a stop to these leaks. It's not fair to the average trader. We've seen it happen time and again. It seems to be getting worse, and no one's doing anything about it. So I'm putting together a call to action. Please click on this link, follow it through, read the article, and there's a follow-up article. You'll see what I wrote. Go contact Eurostat and lodge your complaint. It's time for traders to unite and fight for a level playing field.